Hey super swing traders, I hope you're doing good. Today we're going to take a look at some charts and see where we can identify supply and demand order flow and trade it for income. Okay, let's take a look at stock ticker symbol WIT, WIPRO, SPON. I don't know what this is, but apparently it's a stock that you see the chart here. It says D for dividend and S for... I don't know what S is. If you know what it is, please comment below what it is. I appreciate it. Okay, let's take a look at our top time frame, the 3-month time frame. As you know, I trade with stocks. I trade the 3-month, 1-month, and weekly. I don't really deal with the daily, but sometimes I do. But as you can see, the daily price action is just moving really slow and all that. So I usually do higher time frame trades, and higher time frame is more reliable because that's where the big banks, institutions, hedge fund managers are trading. Okay, all right, take a look at the 3-month first. As you can see, the super strong move, so that is demand here back in 2008 after it recovered from the crash. And then this big move is also another area of demand. It's pretty wide, but who says that you have to take this whole thing? That is why we take the lower levels, lower time frame levels within this level. Okay, all right, so what we have here is, zoom in better. Okay, so what we have here is a trend line right here, but this trend line was broken right here, so we can remove it. And let's see, yeah, so price did touch this area of demand 2 times, rallied, and then now it formed an engulfing candle over here, so price could go lower. But then it also created an area of demand here. Now, whether or not this level is not tradable, and we have very specific rules to tell us why it's not tradable, but this area is not tradable, so any areas inside any demand zones inside this area will need to wait for a validation. Okay, otherwise if it breaks this area and go into this area, then we also need validation because this zone has been tested twice already, one time here and another time here. Okay, but any other way of buying is not allowed. For example, shorting is not allowed because you have this area of demand plus you have another area of demand below, so no shorts allowed. Okay, all right, monthly we have an area. I'm not drawing every single level or area of supply and demand. I'm just drawing the latest ones. So there's an area of demand down here, area of supply up here. When it's just one candle at the base, you can technically do the whole candle. Okay, so that is what we have. We have this range. Okay, so as you remember, on the 3-month, price created a new area of demand, and this area is the one that was created inside of that. So you can see this area is located down here towards the bottom of the wick. Okay, so we have supply up here, demand down here. Demand, bigger time frame demand is in control, so long bias. And let's take a look at our lowest time frame, the weekly time frame. Same story, you have supply up here, supply right here. Okay, and then demand down here. Demand down here, and demand down here. Okay, so that is what we have. So putting all the pieces of the puzzle together, we have monthly or 3 month and up is yeah, it's an uptrend. It's an uptrend because new areas of supply has been created right here, but this level is not tradable. So these levels need confirmation. So it formed an engulfing candle on this candle down here with this monthly area of demand and control, monthly engulfing candle, and another candle closing lower, but we'll see what happens in the next few months. Now our bias is to go long still, but where did we go long? We want to go long down here because supply is up here, so we don't want to buy up here anymore. We want to see price touch this area. It's gonna go up higher, touch this area, and that will give us our chance to drop down here and where we can go long. Okay, so we go long right here and go long right here, and yeah, go back up to test this weekly supply zone or break it and go up here. Okay, otherwise if price doesn't do that, if it go here and it doesn't retrace and it just go like this and touch it again and then break it, and then you buy the area demand that's created after this break. Okay, and then you buy the pullback. And then it'll go up to this area. Okay, and in a nutshell, that's all what supply and demand is. It's just buying where the banks and the hedge fund managers and the professional traders and the institutional traders, everybody is buying. That's where you buy. You buy where the big banks is buying. That is their strategy is just accumulation and distribution, and you want to just catch the wave with them. Okay, all right, so I hope you guys found this video helpful. If you did, please give it a thumbs up and subscribe for new videos that I put out. I put out one every day, either a stock analysis, a forex analysis, or a back testing session where you can look at exactly how I trade and how I back test and my thought process is in my trading methodology. Okay, and thanks for watching, and I'll see you guys in the next video. Thanks for watching. Bye. Thank you for watching this video. Please remember to give it a thumbs up if you enjoyed it and leave a comment below. If you're not already subscribed, please click the subscribe button below and click that little bell icon. That way you'll get notified of the next video that I publish. Thanks again for watching.